Is the audio clear? Very good morning, students. Welcome to Economy Third Class. As you see that in the last session, we were discussing the topic called inflation, right? And I remember that in the topic called inflation, we have been discussing about something called as indicators of inflation. As a part of the indicators of inflation, where did we actually stop? We actually stopped at a point which describes about something called as indicators of inflation. So the first one foremost that we discussed is nothing but GDP deflator. What is that? GDP deflator. I already told you that GDP deflator is one indicator of inflation, which is nothing but nominal GDP by real GDP. What is it called as a nominal GDP by real GDP? And how do you determine whether there is inflation or not with respect to this GDP deflator? If the value of the GDP deflator is greater than 100, it implies inflation. It implies inflation. If the value of the GDP is equal to 100, it implies no inflation in the economy. No inflation in the economy. And if the value of the GDP is less than 100, it implies there is something called as a deflation. What is it called as a deflation? Like that, based on the value of the GDP deflator, you can actually determine whether there is inflation in the economy or not. And then second one that we discussed. Okay. And by the way, that meanwhile, if you got any doubts in the stress session, please do pay me day before stress session. Okay, economy two. And the next is nothing but we discussed producer price index. We discussed WPI wholesale price index. We discussed CPI consumer price index. And in CPI we discussed we got CPI AL. AL stands for agriculture laborers. CPI IW. IW stands for industrial workers. There is nothing but urban population. And then we discuss CPI combined. CPI combined. And the important aspects that we discussed was in WPI basket, we have got 697 items. In CPI AL, there is nothing but agriculture laborers. We got 448 items. Right. When you come to CPI IW, you got 460 items. And the base year for this WPI is nothing but 2011-12. And the base year for this is nothing but 2012. So these are all the things that we have discussed in the last session, right? I hope you remember all these things that we have discussed. So good morning, everyone. Okay. The next one we are going to deal is nothing but we are going to discuss with how do you control inflation in the economy. There are different methods of controlling. The first one is nothing but you can control the inflation in the economy using something called as a monetary policy measures. What are called monetary policy measures. I think you people should be aware of something called as the Reserve Bank of India and the different measures taken over by Reserve Bank of India, right? What are different measures taken over by Reserve Bank of India? They keep on changing repo rate, reverse repo rate, CRR, SLR, all those things. And if you see that in the recent times, because of COVID-19, there was no demand in the market. Now, to boost the demand in the market, they had to reduce the repo rate, reverse repo rate drastically. If you see, as on date, we have got a repo rate of 4%, right? So all these are nothing but they are called as a monetary policy measures. Using monetary policy measures, you can control the inflation in the economy. The second one is nothing but fiscal policy measures. What is it called as a fiscal policy measures? What are fiscal policy measures? These are the measures which are taken by the government of India, people who have joined recently, very good morning and everyone. And when you come to these fiscal policy measures, with respect to fiscal policy measures, government will change the investments, or government will change the expenditure in the budget. For example, if you see in the recent times, government has announced some 20 lakhs crore package, out of which some of them might be in the form of the loans, but rest of them can be somewhere around 2 lakhs plus are in the form of a stimulus given by the government, right? So government is spending money on the migration labor. Government is spending some 40,000 crores of rupees extra on Manrega. Government is spending good amount of money for providing provident fund to the employers and employees. Like that, government is allocating good amount of money. Now this will also control the inflation. So why don't we take 2009 as a base year? The same thing was asked by question Ajay. Ajay, you are asking the same thing. I'm answering your question. See here, whenever you wanted to compare the economy, Mr. Ajay, or whenever you wanted to compare the economy, what we need to do is that we need to compare the economy with the previous year. For example, if there is increase in the price, we need to compare how much is it increased from the previous year. Now the question asked Mr. Ajay is nothing but why 2011-12 or why 2012, why not 2009? Okay, now see here, as economy keeps on moving in the economy, there are a lot of changes happening in the economy. Okay, so like that, changes can happen like this steadily. Sometimes changes can increase, sometimes again it may increase like this. Economy will undergo a lot of changes. Now economy undergoes a lot of changes. For example, you economy has gone like this. Now if this is the economy, you are comparing, let's say this 2009. Okay, let us say this is somewhere around 2012. Let's say this is 2012. Okay, let's say this is 2016. Okay, now when you compare present state, that is 2020 with 2009, you can see that there is enormous increase in the country economy. There is enormous increase in the country's economy. Now definitely from year to year there will be huge increase in the prices, but that is meaningless. Why it's meaningless? In the meanwhile, you see that economy has took a jump here. Economy has took a jump here. Again, when you see economy has took one more jump here. Now it happens that when the economy is going on further, because of some structural changes in the economy, because of some policy changes in the economy may take a leap. Now once economy takes a leap, if you compare an year which is before that leap, that is meaningless. For example, you all would be knowing something called as, there is something called as orange flavored some chocolates. Okay, in Telugu people call them as narinja mitailu. Okay, orange flavored small peppermints, right? Now if you see that, now if you go to a shop and buy this, you spend 20 rupees, you get only 16 chokis. How much you get? 16 chokis in the packet, right? But when I was a kid, I give him 5 paisa. He used to give me 5 this thing, 5 peppermints. 5 paisa, 5 peppermints, 1 rupee, 20. Yes. But now I'm spending 20 rupees, I'm not even getting 20. I'm spending 20 rupees, but I'm not even getting 20. Now, if you try to compare the inflation from year to year, means what? If I give 20 rupees, how much should I get earlier when I was a kid? 20 into 20, I should get 400, right? I should get 400. Now, earlier I should get 400, now I'm getting only 16. Earlier I used to get 400, now I'm getting only 16. Now what is the increase? If you see 400 by 16, I'll round it to 20. So 20 into 20 into 100 is equal to 2000%. Now can I say the inflation is 2000%? It is meaningless. Yes, the value of the peppermint has increased by 2000%. By 2000% means what? 20 times. By 20 times. Okay, if I even consider that I get to 20 peppermints here, if I consider even this example, means earlier one peppermint used to cost me 1 rupee, but but earlier with 1 rupee I used to get 20 peppermints. Means what? The price of these chockies increased by 20 times. Now can I tell to the public saying that okay, inflation here is 2000%? That's meaningless, because go to 1995, 96 or some 92. From there now you're comparing with 2020, it's been more than 10 years or something, okay, 25 years or 30 years, and now you're trying to compare with the previous year, which is 30 years below, because 30 years back things were all different. Having a television was a luxury, having a phone was a luxury, so you cannot compare now with that. So every time the government will try to find a previous year from where there is no tremendous change in the economy, from where there is no tremendous change in the economy. So that is the reason, Mr. Ajay, you cannot take 2009. You have moved from 2009 to 2011 12. Now again you will move to 2017 18. There is a proposal. Already told Ramesh Chand committee. There is a proposal to change the base year from 2000 to 2017 and 18. But that is it. They are under, because in 2017 we got GST. There is a lot of change in the economy. Obviously, they need to have a proper base year. Got it? So this is the answer for your question. And sir, why don't we take your done fiscal policy taken by government of India? Yes, Chandrakant, you're right. Fiscal policy is handled by government of India, right? So like this, sir, this is the answer for your question. Yeah. The next is nothing but second is nothing but fiscal policy. So by changing the allocation of funds to different sectors, government will try to control the economy. How, for example, let us say that people in agriculture are not getting access to credit. People in agriculture are not getting access to any credit. Now if people in agriculture are not getting access to credit, obviously what happens, people in the agriculture field, they'll not cultivate much. When they don't cultivate much, the price of the vegetables or price of the grains will increase, means it's creating inflation. Now what government will do? Government will spend more money on agriculture. When government spends more money on agriculture, more productivity comes. When the more productivity comes, obviously the inflation will be controlled, because supply increases, demand decreases, inflation can be controlled. So these are nothing but a fiscal policy measures. What are these fiscal policy measures? Government is spending huge amount of money on electronics. That is the reason the price of the mobile phones have come down drastically. Yes or no? So these are nothing but fiscal policy measures, right? Next one. Hope I answer your question, Ajay, right? Okay. Good morning, Amma Sojana. Good morning, Amma Shravanti. See, the next one is nothing but administrative measures. What are administrative measures? Administrative measures are nothing but these are the methods measures taken by government of India to see to that there are no black markets in the economy. There are proper food storage facilities. All those things means whatever the activities to be taken by the Food Corporation of India, or it can be by the government officers. All these are nothing but administrative measures. And the fourth one is nothing but supply side measures. What is that called as a supply side measures? Now when you say supply side measures, for example, the price of the onions have increased drastically. Now you want to control the price of the onions. What do? You import onions from abroad and increase the supply. For example, the price of the what is that chicken mutton has increased drastically. Then what government will do? Government may import some goods from abroad, or governments might even encourage farming of poultry or all those things. Like that, if you increase the supply and you control the inflation, that's called as a supply side measures, right? So these are the methods of controlling inflation. What is that called as a methods of controlling inflation, right? Now the next one, I hope this is clear for you, right? The next one, very very important. Yesterday someone was picking those things, that nothing but some concept related to inflation. I told you that increase in the price of the goods and services is called inflation. Then what is deflation? What is a deflation? What do you understand by the term deflation? Deflation basically refers to something called as a decrease in the price of the goods and services. Decrease in the price of the goods and services, that is called as what? Deflation. What is that called as a deflation? So increase is called inflation, decrease is called as a deflation, right? Next one. Disinflation. Anyone has any idea on these topics? Do ping me immediately. Okay. Disinflation. What is the meaning of disinflation? Disinflation is different from deflation. Disinflation is different from deflation. I told you that deflation is nothing but decrease in the price of the commodities. Decrease in the price of the commodities. Okay. But then what is disinflation? What is disinflation? Disinflation is not decrease in the price, but it may refers to something called as a decrease in rate of anyone can ping me answer? Rate of inflation. Decrease in the rate of inflation. What is the difference between decrease in the inflation and decrease in the rate of inflation? For example, let me say that a price was somewhere around, a item was charged at 100 rupees. Okay. Now what is happening? From 100 the price has increased to 110. What is the increase here? The increase is nothing but 10%. Increase is nothing but 10%. No accurate, it's not no inflation, it is decrease in the rate of inflation. Okay. Now from 110 again it has reduced to 108. It has reduced to 108. Then what is happening from year to year if you compare, from year to year if you compare, what is the increase? It is nothing but 8%. It is nothing but 8%. Okay. Now from 100 it has increased to 110, again decreased to 108. If we compare here, the price increased by how much? 8%. But this 8% increase is actually less than what? 10%. Here 8% is actually less than 10%. So this is called as a disinflation. What is it called as a disinflation? Hope I am clear. Okay, any doubts, do ping me without any hesitation. The next one is nothing but a stagflation. Questions are asked on the topic of stagflation very frequently. Okay, what exactly is a stagflation? Stagflation is nothing but it is nothing but inflation without contributing to the growth of the economy. Ante what is the meaning that what is the meaning of that? Economy is not increasing, economy is not improving, but there is inflation in the economy. Okay, now how is the inflation related to the growth of the economy? Means listen very carefully, very important. Whenever there is inflation in the economy, whenever there is a inflation in the economy, obviously what happens? Prices will increase. When prices increases, what will happen? The producers will be happy because they are getting more profits. Okay, means production will increase. When production increases, what happens? Employment increases. Not only that, GDP also increases. GDP also increases. Means what? Inflation is contributing to the growth of the GDP and employment. This should be the normal methodology what inflation should cause. But in this case, what is happening? There is inflation, but there is no employment or there is no growth of the economy or growth of the GDP. This useless inflation is called as a stagflation. What is it called as a stagflation? Shravanti Strauss, Akhil says high rate of unemployment with increase in price. That's true, Akhil. What is the difference between the rate of inflation and decrease in inflation? Very good. Decrease in inflation kaadu, decrease in the price. Shravanti Strauss. Okay, rate of inflation. Okay, both of them are one and the same. Me, if I have misspelled, the thing is that deflation refers to decrease in the price, and disinflation refers to decrease in the inflation, decrease in the rate of inflation or a decrease in inflation. Okay, fine, good observation, Shravanti, appreciated. Okay, so this is nothing but stagflation. Means what? Inflation should contribute to growth of the GDP and employment, but that is not happening. If that is not happening, then what is called as a stagflation? What is it called as a stagflation? Is it clear? The next one, there is something called as a core inflation. What is it called as a core inflation? What exactly is this core inflation? What is the meaning of this core inflation? See here, core inflation is nothing but they are trying to calculate inflation by removing certain commodities. Some commodities which are very volatile in nature, whose prices are increasing abnormally, they will try to put those things outside, and for remaining things they will calculate the inflation. For example, this term has been coined during UPA government in 2009. In 2009, there was a huge inflation, 9 to 10% inflation. Now, when there was a huge inflation, government was getting a bad name, saying that it is not able to control inflation. Immediately, what government did? Government took the food prices, government took the food, government took the energy products, food products and energy products. Means like dal, all these things are food products. Energy products such as petroleum, okay, diesel, all those things. They kept them aside. For remaining, they calculated the inflation and they gave the term as a core inflation. They gave the term as a core inflation. Sri Harsha. Core inflation is the change in the cost of goods and services but does not include those for food. Yes, that's true, Mr. Sri Harsha. Well said. Okay, so there's nothing but a core inflation. So yes, put that in a nice sentence, Sri Harsha. Appreciate it, man. Okay, so this is nothing but core inflation. The next one, reflation. What is it called as a reflation? What is the meaning of reflation? The meaning of reflation is nothing but it is called as a artificial inflation. For you to take a notes, I'll write a statement also on this. Don't worry. Core inflation means inflation without food and energy products. Products. Okay. Stagflation means inflation not useful to economy. Not useful to economy is not useful to growth and not useful to this one. Now reflation, artificial inflation means what? Inflation created by the government is called as a reflation. Inflation created by the government. Why will government create inflation? Yes, government will create inflation because government wanted to boost the production. When will a producer produce the item? When there is increase in the price of the goods and services, then producer will feel encouraged. Yes, if I produce something, I can sell it at a good price. Now to encourage the producers, they will increase the price of the goods and services. Government will do that artificially, and that is called as what? A reflation. What is it called as a reflation? I'll give an example for that. I'll give an example for that. Pritham Nala, sir, why only food and energy sectors in core inflation? No, why only not? Why not food and energy? You have misunderstood the statement. You should not ask me why only food. Why only food and energy are excluded? They are not part of core inflation. So without, very very important, Pritham. That's very very important general awareness. Read the question carefully. Withunda, without unda, without food and inflation. Okay, so that's very very important. Okay, so I hope this is clear. Just to make a snapshot of this, so that I'll remove this unnecessary aspects. Just a way. Meanwhile, if you have got any doubts, you can ping me because streaming and real class they would be differ by few 1 minute or something. So you have got any doubts, do ping me. Meanwhile, take a screenshot also. Yeah. See, to explain you reflation very clearly, very very important. This is the right time to explain this concept also. We have got something called as a business cycle. What is a business cycle? There's something called as a boom. There's something called as a boom in the economy. What is the meaning of boom in the economy? Everyone is having employment. Everyone is, not everyone is, most of them, and everyone is having good money to spend. There are many people who are actually creating production. Okay, like that, everything is at a high note. Everything is very very nice. There's nothing like a missing out. Okay, so please explain reflection again. So I'm doing that same thing. Mr. Venkat Lakshmi Narayana Rama Lakshman Gandhi, very big name. So at present, what is the situation of economy? I'll tell you. Sir, give an example for reflection. Yes, I'm doing that, Chandralekha. Okay, see here. So there is something called as a boom in the economy. You see, everything is fine. You know, have you seen that means Manchu Lakshmi's show? Boom, boom, like that. Everything is in a high note. Now, when everything is fine, like it's called as a boom. Okay, people are getting good employment. All, yeah, boom, good economy. Now, if some disturbance happens to boom, if some disturbance happens to boom, okay, what is inflation or reflation or stagflation? What do you mean by Ajay? I don't understand. Okay. Okay. What is the current state of economy? You're putting that same condition. Okay. Send us what is Ajay. In between, some others will ping you that. Okay. Boom ki disturbance hoste, it will result into something called as a recession. When there is a disturbance to the boom, means something got disturbed. Either demand got disturbed or supply got disturbed or employment got disturbed, then it will immediately go for something called recession. From boom to recession, you see that the economy is slightly coming down, people are losing employment, all those things. Now when recession is not controlled, it will result into something called as a depression. It will result into something called as a depression. Okay, depression is the worst state of the economy. That is nothing but today's economy. Today's economy is an ample example of depression because India is, we have gone beyond recession. Dolly Vadlapudi, we have gone to depression. We have gone to depression because everything has come down to the lowest possible. India might register a negative growth rate. Okay, so we are into depression. Now when the economy is in depression, government will take up some initiatives. Okay, and they will try to create a demand in the economy by creating the prices, increasing the prices. And this process of artificial increase in the prices, okay, by increased expenditure of the government is called as a reflation. For example, if you see that the government announcing 20 lakh crore package, which you have discussed in the morning sessions last 2 days, right? In current affairs, you would have discussed the 20 lakhs crore package things. All these are nothing but they are the reflationary measures. Government wanted to see to that the prices are increasing, so it is encouraging the producers to do that. So all these are nothing but reflationary measures, and it is an example of reflation. So when there is a depression, government will take up these things and government will try to increase the price. That process of increasing the price, still now we did not go to that. We will go to that. Okay, maybe it may take 6 months or 1 year. Slowly we'll move from depression to reflation if we do good. Now if this reflation becomes too much of excess, again will result into something called as a boom. Yeah, the recovery phase. Very well said, Venkatramana Lakshmi Gandhi. Okay, well said. So like this, this is nothing but is called as a business cycle. What is it called as a business cycle? So this business cycle will explain the concept of reflation. Now if you see that this same thing we also discuss in unemployment, because from year to year you see unemployment happening. From year to year again you see unemployment happening. Now here they're trying to artificially increase the prices. It's encouraging the producers, so producers will start production. As they start production, what will happen? Employment will happen. Employment will happen, and from year to year again employment will increase. So the same concept can be discussed in employment also. Okay, fine. So this is nothing but a business cycle. Make a note of that business cycle. Just take a screenshot very very fast. The Great Depression from 1929 to 1939. Yes, Sriasha, that took place in USA, the Great Depression. Okay, and you can see recession happened in USA in 2008 2009. So these are the examples what India faced. Okay, even in 2000 India had faced a recession where people lost IT jobs. Okay, so this is very very important aspect. Okay, fine. So I hope you have taken a screenshot of this. Okay. So 1991 situation also reflation examples are LPG. That I cannot say reflation. Pritham, that we'll discuss when we are discussing about a fiscal policy. Okay, in fiscal policy we come across something called as a balance of payment crisis. We'll discuss the 1991 situation where we are discussing about the fiscal policy. Okay. Shravanti Shravs, sir, prices increase the production ki benefit, but government poor and middle class people ki ela help చేస్తుంది. Government will push money into the hands of the poor and middle class. వాళ్ళ చేతుల్లోకి డబ్బులు పుష్ చేస్తుంది. ఒక పక్క వీళ్ళకు బిజినెస్ కి హెల్ప్ చేస్తుంది, ఇంకో పక్క పుష్ చేస్తుంది. ఓకే, సో అలా చేస్తామా శ్రావ్స్? ఓకేనా, ఫైన్. So I hope this is clear. The next one, so that is all about inflation topic. And what is that inflation topic? The next one that we are going to deal in today's session is nothing but Indian taxation system. Indian taxation system. Indian taxation system. What exactly is this Indian taxation system? I hope I answer your question, Strauss. Okay. Now, when you come to Indian taxation system, basically remember that tax is a compulsory and legal obligation of individual towards the society. అంటే tax మీరు కంపల్సరీ కట్టాలి, ఎట్టి పరిస్థితుల్లో మీరు కట్టాలి. కట్టకపోతే మిమ్మల్ని తీసుకెళ్ళేసి, if you don't pay tax, I'm sorry, I'm repeating in English also. When you tax is something to be paid compulsory, and if you don't pay tax, you can be legally punished. So it is a compulsory and legal obligation of an individual towards the society. And remember that tax is very very important. The first is nothing but it is important because to generate revenue to government. It generates a revenue to government. Okay, the second important is that it reduces economic inequalities. Reduces economic inequalities. It reduces the economic inequalities. And the third thing it's important because this taxation regulates the economy regulates the economy. So these are the main benefits of taxation. The first is it generates revenue to government. Whatever the revenue that government wants, government can get the revenue. Okay, so through this, so generates revenue to government through taxation. Second, it reduces the economic inequalities. You know that the economic inequality in India is very very high. Rich are the richer, poor are the poorer. You can see the migrants people, and you can also see the rich people coming from abroad in their own by paying themselves the plane fare, right? Now, so there's a lot of economic inequality that can be reduced using taxation, because tax is imposed on the rich and subsidies are given to the poor. So like this you can reduce the economic inequalities. The next is something about regulates the economy. What is the meaning of regulating the economy? The regulate, yeah, development of nation, that's true. Regulating the economy is nothing but it is trying to see to that if someone is spending too much of money, government can control them by reducing the money in their hands by imposing more direct taxes. For example, if someone is purchasing certain commodity more and more, government can control their purchase also by imposing more indirect taxes, right? So by through taxation, government can see to that who has to purchase, what should be purchased. So like that, government can control the economy using what? Taxation. Using a taxation. And the very very important, we have got two types of taxes. We have got two types of taxes. What are two types of taxes? One is called as direct taxes. Other one is called as indirect taxes. So we got two types of taxes. One is called as a direct tax, and one is called as a indirect tax. Now, when you come to direct tax, what exactly is the difference? I think most of you would be aware. Direct tax is a tax. Direct tax is a tax which is imposed. Direct tax is a tax which is imposed on certain person, where the same person pays the tax, the same person takes the burden also. Okay, means what? If the payer of the tax and the burden taker on the same person, only one person, then that is called as a direct tax. It is called as a direct tax. Otherwise, let's say if the payer is one person and if the burden taker is the other person, then that is called as the indirect tax. That is called as what? Indirect tax. Okay. Yes, income tax example of a direct tax, right? So if the payer and the burden taker are the single entity, that is called as a direct tax. If the payer and the burden taker are the different entities, then that is called as a indirect tax. Okay. Whoever pays, he himself pays from his own money. Here it is paid by one person, but it's not paid from his own money. It is paid from someone else's money. Okay, like that. Otherwise you can say that in direct tax it is not possible to shift the burden to someone else. In direct tax it is not possible to shift the burden to someone else, but when you come to indirect tax it is possible to shift the burden to someone else, because initially he pays and he pays from his own money, but initially this person pays, finally he takes that money from someone else, so burden can be shifted to someone else. So like that you got direct tax and indirect taxes, right? I'll give you examples also, don't worry. First of all, understand that the direct taxes are managed by a board, and that board is called as a CBDT. Now tell me, who is the chairman of CBDT? Who is the chairman of CBDT? Anyone can answer me. And the indirect taxes are managed by a board called CBIC, are managed by a board called as a CBIC. Okay, CBDT stands for Central Board of Direct Taxes. Central Board of Direct Taxes. Now, when you come to CBIC, okay, Central Board of Indirect Taxes and Customs. Central Board of Indirect Taxes and Customs. So, yeah, GST is indirect tax. That's true. Okay, so CBDT and CBIC, they are the two boards that manage the direct tax and indirect tax. Even GST is also controlled by CBIC only, because GST is a indirect tax, right? See, PC Modi, Pramod Chandra Modi is the chairman of CBDT, and we got new person for CBI. His name is Ajit Kumar. What is that? Ajit Kumar. Ajit Kumar is the chairman of CBIC. Ajit Kumar. Earlier we had Pranab K. Das, but now Pranab K. Das is gone. Now we have got Ajit Kumar. So like this, we have got the Central Board of Direct Taxes, Central Board of Indirect Taxes and Customs. So these are the different types of taxes. Different types of taxes. So basically, Indian taxation system, tax is a compulsory and legal obligation of individual towards the society. The purpose of taxation, generates revenue to government. Sorry, reduces the economic inequalities and regulates the economy. When you come to types of taxes, two types of taxes: direct taxes, indirect taxes. When you come to direct taxes, they are managed by CBDT, Central Board of Direct Taxes. Chairman is Pramod Chandra Modi, and the payer and the burden taker are the same person in direct taxes. When you come to indirect taxes, the payer and the burden taker are different entities, and the pay one person pays the tax and the burden is on the other person. And when you come to this, the CBIC chairman is Ajit Kumar. Okay, now how do you understand that? For example, okay, some of you have given me example of direct taxes as a income tax. What you said, income tax. For example, I am paying income tax. For example, let us say that I am earning, let's say, 10 lakhs of rupees per annum. I am earning, let's say, 10 lakhs of rupees per annum. Okay, and on average, maybe I'll pay, out of removing some 5 lakhs, remaining 5 lakhs, I'll pay, let's say, 20%, somewhere around 1 lakh rupees. What is that I pay? I pay 1 lakh rupees as income tax. Yes or no? Okay. Now, what is left over with me? Only 9 lakhs. Now, who is paying the income tax? I am paying the income tax. Why am I saying that I am paying the income tax? Because if I give my PAN card number, I can check in the CBDT website that a person by the name Narsimha Reddy Kasaram with so and so PAN card number has paid the income tax and JPC. It is clearly seen in the CBDT website. Right? Means what? There is a proof that I paid the income tax. Now, if I am aiming 10 lakhs of rupees, I am paying how much? 1 lakh rupees to the income tax. Yes or no? Whose money is this 1 lakh? My money. Because after paying income tax, what I am left over is only 9 lakhs rupees. Means what? I am paying the income tax and the burden is also on me. I am not taking anyone else's money. Right? So this is an example of direct taxes. Now let us go to something called as the indirect taxes. Now when you go to indirect taxes, example, GST. Okay, you go to any store and buy 1000 rupees worth items. Okay, now there will be, let's say, some 18% of GST. Means what? 180 rupees of GST. Okay, now total amount that you pay to the shop is nothing but 1180. Out of the 1000 rupees for the cost of the items and 180 rupees is the GST. Now this 180 rupees you are paying to whom? Let's say DMart. Now you pay 1180 rupees to DMart. DMart is giving a slip saying that this person has paid this much. But DMart will take this 180 rupees and give it to whom? CBIC. Now if you go to the CBIC website and check with the invoice number, it will be the name of the DMart who has paid, sorry, not E. DMart who has paid the tax, not you. But who gave this money? You gave this money. You gave this money. Means what? You are taking the burden. He is making the payment. So DMart is a payer and you are the burden taker. So that is the reason it's what kind of tax? Indirect tax. What kind of tax? Indirect tax. Yes, that's true. Indirect tax, excess tax, all these are true, right? Okay. So these are some introduction about Indian taxation system. Introduction about what? Indian taxation system. So please take a screenshot of this so that we can go ahead. We can go ahead. Okay. Any doubts you can ping me meanwhile. Okay, I'll answer your doubts occasionally. Right? So I hope you have taken the screenshot. Let me move to the next one. Let's go to the different types of direct taxes. Different types of what? Direct taxes. Now when I say different types of direct taxes, okay, the first and the foremost is nothing but income tax. I'll quickly go to the changes in the income tax. I'll not go when they are, I'll not take much time because okay, you're all done with the basics, right? So when you come to income tax, basically we have got an old system and we have got a new system also. Now if you see the old system, how does it work? Up to 2.5 lakh, no tax. 2.5 lakhs to 5 lakhs, the tax is 5%. 5 lakhs to 10 lakhs, the tax is 20%. Greater than 10 lakhs, the tax is 30%. This is the old system. This is the old system. Corporate tax is example of direct tax. Yes, true. Okay, fine. Now, when you come to new system, when you come to new system, 0 to 2.5 lakh, nil. 2.5 lakhs to 5 lakh, 5%. 5 lakhs to 5 lakhs to 7.5 lakh, 10%. 7.5 lakh to, this is important, it's changing, 10 lakhs, 15%. 10 lakhs to 12.5 lakh, 20%. 12.5 lakh to 15 lakhs, 25%. Greater than 15 lakhs, 30%. So these are the changes in the taxation system of the income tax. Okay. In the earlier case, this was the tax, and in the new case, this is the tax. Earlier case, this was the tax, and new case, this is the tax. Earlier case, if you're earning between 5 to 10 lakhs, you are supposed to pay 20%. But now when you come to do 5 to 10 lakhs, some of you pay 10%, some of you pay 15%. Earlier, if you're earning more than 10 lakhs, you have to pay 30%. But now only 15 lakhs and above is paying how much? 30%. So how, who is going to get a benefit out of this? Means it depends on person to person, because in the old system you had got something called as a income tax exemptions, income tax exemptions, such as a 1.5 lakh under section 80C. Okay, 2 lakhs home loan interest. Okay, you got something like a 0.5 lakh, means 50,000 rupees standard deduction. Okay, like this you got a multiple benefits in the old system, but new systems is that reducing your tax, there is no any benefit. So depends, if you are able to save money in the life insurance schemes, here if you come to life insurance or mutual funds, or if you are saving money in PPF, EPF, GPF, if you are paying your principal of your home loan, you can get exemption for these things. Sukanya Samruddhi Yojana, you get benefit for these things. But if you're not doing that, that is a better one. Okay, and people are earning more amount of money, some crores and crores of rupees. They are getting benefit here compared to that one. So it depends on person to person. It depends on person to person. So this is nothing but income tax. This is nothing but a income tax. Very, very important. Okay. So definitely see here. I hope you people are writing the examinations. Okay. You have to write the examinations every day. And when you write an examination, when you don't understand a point in that, okay, you can ask me the doubt here so that I can also explain you the topic also. So every day listen to the class, also write the examination. Okay, sometimes I may leave some concept for the question mark for the examination also, because I wanted to write the examination, get a question out of that examination, and ask me a question in the next class. So that is the reason definitely I'm leaving something for you to ask me also. That's very, very important, because writing examination is most important aspect. Okay, so like this is nothing but something called as a income tax. Okay, very important. The next one, okay, corporate tax. Corporate tax. Very, 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 very important is a corporate tax. What exactly is a corporate tax? See here, corporate tax is nothing but it is a tax imposed on the income of the corporates. For example, you got some companies like TCS, you got companies like Infosys, you got companies like Reliance. Now these people earn income, they get revenue, right? Out of the turnover, some of them will be their profits. Now whatever the profits that they are getting, they need to pay some tax to the government. They need to pay some tax to the government, and that tax is nothing but it's called the corporate tax. Remember that out of all the direct taxes, very, very important question, out of all the direct taxes, the highest revenue generating tax is corporate tax, which is almost equal to the GST. Whatever the GST is earning, the similar amount of revenue is also earned by the corporate tax. So very important is a corporate tax. Why it is called as a direct tax? The tax is paid by the company out of the profits of the company, paid by the company out of the profits of the company. So that is the reason it's very important. It's very important. Now what is the change? What is the change means? Recently the corporate tax is reduced to 22%. Recently the corporate tax is reduced to 22% for all the enterprises. Means what? Micro, small, medium, large. For everyone, they have reduced the corporate tax to how much? 22%. So this is a very important update. Very important update. Earlier these people had something called 25%. This fellow's large one greater than 400 crores had got 30%. Now everything is reduced from 25 to 30% to how much? 22%. Very important. The change in the corporate tax. There was a lot of criticism on Nirmala Sitharaman for doing this change. Okay. Now one important aspect here, what is that? If some company is not paying any corporate tax, means what? They are not showing that revenue, they are using all the exemptions and they're saying that we are not under this slab of paying corporate tax, so we are not paying corporate tax. Then what government said? For such people government has put something called as MAT, minimum alternate tax. Very important. What is it called as? Minimum alternate tax. MAT stands for minimum alternate tax. Means what? The companies which are not paying corporate tax will have to pay some percentage of the tax as a MAT, and currently it is nothing but 15%. What is MAT? Is nothing but 15%. Very important. Any doubts, do ask me. Okay. So minimum alternate tax is a tax imposed on the non-tax paying companies. Tax imposed on the non-tax paying companies. That's called as a minimum alternate tax. Okay. The next one we have got something called DDT, dividend distribution tax. What is it called as? A dividend distribution tax. What is this dividend distribution tax? Dividend distribution tax is a tax imposed on the dividends distributed by the company to the shareholders. For example, I am a shareholder. I have got, let's say, 100 Infosys shares. Now Infosys got some profits. Infosys give me the profits to me. Okay. When Infosys is giving me some profits to me, I'm getting that some money that's called as a dividend. Now, earlier Infosys was paying the dividend distribution tax of more than 20%. But now I need to pay the tax which is equal to 10%. How much I need to pay? 10%. So that is called as a dividend distribution tax. What is that called as? A dividend distribution tax. Okay. And this is applicable if my dividend value is greater than 5,000 rupees. Means if I'm getting a dividend more than 5,000 rupees, then I need to pay something called as dividend distribution tax. How much it is? 10%. How much it is? 10%. So I need to pay 10% of dividend distribution tax. And who is going to pay MAT? The MAT is paid by the companies. If any company is not paying any corporate tax by using all the exemptions, minimum they need to pay some tax, and that tax is nothing but a minimum alternate tax. Minimum alternate tax. Okay, sir, by considering which parameter we call something as a corporate? So it's very simple, Chandu. It's nothing like that. Any company, corporate tax is a tax applicable to any company, private companies basically. Okay, you call them as a corporate. Okay, there's nothing much. It means in-depth is also not required, but this is a generic thing. Okay, any company it will be applicable. Okay, so these are something related to the tax paid by the company, which are the direct taxes. Okay, just take a screenshot of this. What is important is that the tax percentage of 22% is important. Minimum alternate tax recently reduced from 18% to 15%, and dividend distribution tax is imposed on shareholders. Very important. Not on the companies, but on shareholders. Earlier it was on the companies, now it is on the shareholders. It is on the shareholders. Shravs, for non-paying companies, who will pay the tax to government? Companies will pay the tax to government, Shravs. Yeah. Are dividend and shares same, sir? No, both are different, Ramarao. For example, I told you that I am holding 100 shares of Infosys. Let's say each share is value 700 rupees. Means what? 100 into 700. It's going to how much? 70,000, right? Means I am holding a shares of Infosys to the value of 70,000. Maybe I am getting 10,000 rupees as a dividend. Means what? When Infosys gets profits, Infosys is giving me profits. Okay, that profit is called as a dividend, not the share. Okay, hope I answered. Sir, tax paying companies pay how much, sir? Tax paying companies will pay 20% corporate tax. They pay 20%. If someone is not paying corporate tax, saying that we got this exemption, that exemption, because there will be some exemptions. You declare some money as expenditure, all those things, and finally you would say that I'm not getting any revenue, any profits. So if you are showing all the exemptions and you're not paying any corporate tax, then definitely you have to pay something called as a 15%. That's a minimum alternate tax. Okay. So whichever is missing out corporate tax, for them MAT will be applicable. Once again repeat MAT and DDT. Sure, Amish House. MAT, minimum alternate tax, is a tax imposed on the companies which are not paying any corporate tax. Okay, means they are getting profits, but by showing all the exemptions they are not. For example, in earlier case, I'm earning, let's say, 10 lakhs rupees, but I'll show some exemption of 1.5 lakh here and 2 lakhs here and 50,000 here, and I don't pay any income tax. Similarly, company also can show like that. Company also can show like that, and they can evade paying up any tax. In such case, they have to pay something called as a minimum alternate tax. Means at any cost, any company will have to pay 15%. There is no escape. To say that there is no escape, minimum alternate tax is available. When you come to dividend distribution tax, a company is earning profits. Some profits is giving to the shareholders. Now, whatever the profits given to the shareholders will pay some tax to the government because they're getting some profits. That is called as a dividend distribution tax. It is 10%. If the value of the dividend that they're getting is more than 5,000 rupees. Okay. Understood. Okay. So, Shravs, I think it should be clear. Ajay, sir, is DDT comes under income tax? Yes, it is a part of income tax. Ajay, well said. Sir, is there are any penalty for failure to pay? Definitely, they will put some additional money also. Okay, they'll impose fines because both are paying. Yes, that's true, Ajay. Okay, I think things are clear. Okay, just quickly take a screenshot. Then I will go further. Okay, the next. Done. The next one. If any company in loss, then they will they'll pay 15% MAT. Yes, 15%. No, no. If they're lost, they not pay. But if they show profits, they have to pay. Okay. Yes. Yeah, it's a direct tax, Ajay. It's a direct tax. No doubt in that. It's a direct tax. Okay. Next one. We have got something called capital gains tax. Capital gains tax are nothing but you invest some 20 lakhs of rupees on a capital in the sense land or a property, whatever it is. You sell it again for 50 lakhs. You get how much? 30 lakhs as a profit. On this, you need to pay some tax to the government. On this, you need to pay some tax to the government. That is called as a capital gains tax. It's around 20%. What is it called as a capital gains tax? Provided you sell the property after 2 years. Capital gains tax is applicable if you sell the property after 2 years. Now, on this 30 lakhs, you have to pay some 20% is equal to somewhere around 60,000 rupees of tax to the government. 3 to the 6 ante 60,000 rupees of tax to the government. Got it? So 6 lakhs, not 60,000, 6 lakhs. 30 low ante 6 lakhs. Yeah. So this is what you need to pay. This is called as a capital gains tax. What is it called as a capital gains tax? Then next we have got something called as the capital gains tax on equity. What is the meaning of capital gains tax on equity? You buy some shares, you sell some shares, you get some benefit. You buy some shares, you sell some shares, you get benefit. For example, you bought 5 lakh shares, you sold the same shares for 9 lakhs. You are getting benefit of 4 lakhs. You get benefit of how much? 4 lakhs. Out of these 4 lakhs, on 1 lakh there will not be any tax. Remaining 3 lakhs, there will be tax of 10%. Means what? 30,000 you have to pay tax to the government. So that is called as a capital gains tax on equity. What is it called as a capital gains tax on equity? So like that. Yeah, property tax is not a capital gains tax. Property tax is different, Ajay. I'll tell you what is that. Okay. So here you're investing on physical assets, on land, all those things. But here you're investing on the shares. There's a only small difference. Here the tax percentage is 20%. Here the tax percentage is 10% on the gains minus 1 lakh. Okay. In this case, if you don't wait for 2 years, if you sell it less than 2 years, you have to pay tax as per your income tax slab. As per your income tax slab. Means what? Whatever I told you here, na, as per this slab, you have to pay tax to the government. Okay. So that is how it works. That's how it works. Here, for example, if you are selling the property, if you are selling the shares greater than 1 year, that is this is applicable. But if you're selling the shares less than 1 year, means you bought and sold before 1 year, then the round figure, the tax is nothing but 15%. What is the tax? 15%. So this is how it have. Yeah, tax on the profits of the shares. Well said, Sunita. Tax on the profit on the shares is called as a capital gains tax on equity. Okay, very clear. So there are two things, Andy. Very, very simple. Two things. What are the two things? First, we discuss about the long term. Here, long term means greater than 2 years. Here, the long term is greater than 1 year. In case of long term, the tax is how much here? 20%. The board is stuck. Just to give me a minute. Please take a screenshot of this. Take a screenshot. I'll just get this sorted out. Yeah. Fine. See here, I'm explaining once again these two things. First one, capital gains tax. Capital gains tax. Capital, some sort of investment. Okay. Here we are not specifically mentioning anything, so it is a physical investment. Land, property, plot, okay, all these things. Real estate kind of investments, right? Now, When you're investing money in that, maybe you bought a plot with 20 lakhs worth. You sold it for what? 50 lakhs. You sold for what? 50 lakhs. Now bought it for 20 lakhs, sold it for 50 lakhs. You got a benefit of how much? 30 lakhs. Now, whenever you got a benefit of 30 lakhs, okay, just give me a minute. Let me check these questions. If you have 100 shares and one share costs 700 rupees, then total cost is 70,000. If we get 10,000 dividend for our shares holding, it's our profit. Okay, we have 100 shares in one share cost 700. Okay, and total cost is 70,000. 70,000 is the value of the shares. Even for our shares holding it, it's our profit. Yeah, on 10,000 rupees, you need to pay dividend distribution tax, Mr. Kitty Cat. Okay, what is the tax imposed on the intra trading of shares? On intra trading of shares, there is nothing but short term capital gains tax. Vishwanath. Okay, Strauss. Tax on profit of shares is called CGT. On equality and sharing of profits of shares is called dividend distribution tax. Tax on the profit of shares is called as capital gains tax on equity. That's true. Okay, fine. That's true. You're right, Amma Strauss. But what happens if the company experiences loss? So do we get back our 70,000 investment? No, kitty cat. You don't get it back because the shares are subjected to market risk. Read the scheme related documents carefully. Okay. So the tax is paid on profits only. That's true. Once again, explain minimum and maximum period of citizens. Yes, I'm doing that, Strauss. Thank you. See you, Nikra. Capital gains tax. Okay, 20 lakhs you invested, you have sold it for 50 lakhs, you got a benefit of 30 lakhs. Now let us say that this time period is greater than 2 years. Means what? You bought it in I hope my audio should be clear. Yeah. So if you see that if you bought that property in 2018, you sold that property in 2021, you're selling it for more than 2 years. When you're selling the property beyond 2 years, when you're selling the property beyond 2 years, obviously it's a part of long-term capital gains tax. What is that called as a long-term capital gains tax? You end up paying 20% of the profits. On 30 lakhs, 20% is nothing but 60,000, 6 lakhs, right? So this is long term. For example, if you are selling it less than 2 years, then whatever the 30 lakhs you got, we'll take that 30 lakhs like this and we'll go to another one. We'll add that 30 lakhs here, 30 lakhs here, and we'll impose the tax of 30%. We'll impose the tax of 30%. Is that clear? So that is how it works. That is how it works. I hope this is clear. So long-term capital gains tax, short-term capital gains tax. Long-term capital gains tax, okay. Long-term capital gains tax, the tax is imposed on the benefits that you derive from investments for a period greater than 2 years. Short-term capital gains tax, the tax is imposed on the benefits that you derive for a period less than 2 years. Same thing is here, but you're not investing on physical property. Rather than you're trying to invest on equity. You're trying to invest on equity. You're trying to invest on equity. Equity in the sense what? You're trying to invest money on the shares rather than this one. So, for example, today you buy some shares and you sell the shares after 1 year. What are the benefits that you get? You need to pay tax of 10% on the benefits minus 1 lakh. On the benefits minus 1 lakh. Means if you're getting 4 lakhs of benefits, on 3 lakhs you need to pay 10%, that is nothing but 30,000. That is nothing but 30,000. For example, if you get a loss, don't pay tax, that's it. And declare that loss. For that year, your income will be reduced. Okay. But if you're getting the benefits before 1 year, outright you need to pay 15% of the tax. Outright you need to pay 15% of the tax. So there is nothing but capital gains tax on equity. I hope I'm clear with this, right? Now let me answer the question of Mr. Ajay. Ajay, property tax. It is not equal to capital gains tax because the tax is not imposed because you got some benefits out of the property. The tax is imposed because you own a property. For example, IACE Amirpet office is on the highway, right? Almost very close to highway. Means what? The value of the property very close to highways are very, very high. Now what happens? The percentage of the tax, that is property tax, will be dependent on the value of this property. This four-floor building, whatever its value on that, they'll calculate some high percentage and they'll impose a property tax. For example, if your home is on a very remote place in the city, means very far from highway, means what, the value of the property very remote is very less compared to the IAC building, right? Now it's first thing is that your property is very remote, so the percentage of the tax will be less. Second thing is that since your property is remote, your value of the property also will be less, so you pay very less property tax. Why do you pay property tax? Because your building maintenance is taken over by the government. How government is taking over? You do all this, you eat food, you take bath, you do all these things. All this chatta, everything goes to the drainage. Who is giving you the drainage facility? It is the government of India who is giving you the drainage facility. You want drinking water. Who is supplying drinking water? Government of India, sorry, government of Telangana is supplying a drinking water. Now when government is supplying all these facilities, government is providing you street lights in front of your property, government is doing all these things, so government will charge some money for you. Government is providing you some security also, they're fixing some CCTV cameras also. So that's how government does. So property tax, don't get confused with the capital gains tax. Clear? I hope. Yeah, I got some more questions. Sir, we will sell property less than we purchase. In such case, how much will tax? There will not be any tax, Kant Kumar. Sapna Thatikonda, tax is paid on profits only. Yes. Sir, if capital gains tax is paid, are they supposed to pay the income tax on the profit they get? Yes, both are different. If it's short term, then that becomes income tax. If it is a long term, it becomes a capital gains tax. As simple as that. Okay. So I hope that things are clear. So that's the concept of property tax. And remember that we got one concept. What is that called as a ad valorem tax? Ad valorem tax. Valorem. What is the meaning of ad valorem tax? Ad valorem tax is nothing but it is a refers to a tax such as property tax. How? Tax imposed on the value of the item, that is called as the ad valorem tax. Means what? It depends. If the value of the item is more tax. If the value of the item is less tax. So based on the value of the commodity, if the tax is dependent, and that tax is called as the ad valorem tax. So property tax is example of ad valorem tax. Property value is example of ad valorem tax. For garbage collection, roads, fresh water supply. Yes, that's true, Asriyasha. Okay, clear? So because you asked me about property tax, you also got one more concept that's called ad valorem tax. Huh? Anyone tax to be paid? Anyone tax to be paid? What is the meaning of that? Anyone tax to be paid, Sunita? Please make your question clear. Okay, so these are all the examples of what direct taxes. So with this we can put an end to the concept of direct taxes, right? The next one, and the next one, see here, there is something called as a VAT. What is the full form of VAT? What is the full form of tax? Value added tax. Value added tax. It's a kind of indirect tax. It's a kind of a indirect tax. Means what? For example, gold is generally seen in the form of bars, right? Now this gold bar is taken and it is converted into ornament. This is ornament, ankondi. So let's put some diamonds also here. Okay, yeah. Now when this bar is converted into this ornament, obviously you go to our Kiran Kumar Lalita Jewelries. Okay, double everki urke rao. No one gets money for free, right? So you go to and purchase an ornament. Now there is something called as a VAT on that. There is something called as a VAT on that. Why VAT? Because a metal is converted into a valuable ornament. A metal is converted into a valuable ornaments by giving some design to that. So he is doing some value addition, so you pay something called as a VAT. That is the reason whenever you purchase anything, okay, whenever you purchase anything, you can see to that. You can see that there is a VAT on that on most of the items where some value addition is done. Here some value addition is done, so they are putting something called as a VAT. Yeah, that's true, Sriyasha. Very good. Okay, so there's nothing but a value added tax, value added tax. Okay, one more thing, there is something called as a excise tax. What is the meaning of excise tax? Excise tax is nothing but it's a tax imposed on the manufactured items. It's a tax imposed on what? Manufactured items. Means what? Anything that you create, anything that you produce, manufacture, some tax is attached to that. It's called as excise tax. Now it's not there. It's made part of a GST. You got big portion from Lavanya. Okay, sir. If capital gains tax is paid on the amount they got by selling land, are they supposed to pay the income tax on the remaining amount of their profit they got on selling that land? Tax is paid on the amount they got. Tax is not paid on the amount that they got, Lavanya. The tax is paid on the profit they got by selling the land. Very clear. Okay, now tax is paid on the profit that they got by selling the land. If you still don't wanted to pay tax to the government, you can do one thing. When you sell a land, whatever the money that you get, Lavanya, take that money and buy one more property within 6 months. Then you need not pay even single paisa tax because there's only change of the property. There's no benefits derived by selling the property. Okay, I want to make this point very clear. On alcohol, cigarettes, yes, alcohol, any manufactured, that is nothing but excess tax. Difference between VAT and ad valorem tax. VAT is nothing but one form of the item is converted into other form. Is converted into other form. In conversion, you are doing some value addition. Value addition. VAT is fixed, means they fix certain percentage. They, for example, they can be like 3% or something like that. But what is ad valorem tax? For example, there is a property. There is one more property, big property. Let's take same property. Why big property? I'll make it very clear. Okay. There is one more property. Same size. This is IAC. This is who is that? Ramesh Ramarao, right? Okay. RRR property. Wow. RRR. Nice. Okay. So మీకు డోర్ ఉంది, మీకు కూడా డోర్ ఉందండి. You also have got door. Okay. Now value of the IAC property, let's say 4 crores because very close to highway. Highway is just going like this. But your property is inside. Ante from highway you need one more road. One more road, again one more road comes. Isn't that you go like this? From where you go like this, again one more road is there. From there your property comes. Very inside, very inside. Now, because of being inside, okay, what happens? Maybe your property value, same size building, maybe it is costing only 50 lakhs. Okay, size is same, but the value is less. Now, for example, on IAC property, they are imposing, let's say, 20% property tax. On this building, they impose, let's say, only 7% property tax. Why? The value of this building is 4 crores. The value of the building is only 50 lakhs. It is very close to highway. This is very, very initial. Means what? This 20% or 7% depend on what value of the property. So as the value of the property increases, more tax. Value of the property is less, very less tax. I hope I answered your question, Mr. RRR. Okay, making charges VAT is same, sir. Yes, Dinesh Kumar, Mr. Bhushan Steel, it's the same. It's the same Bhushan. Okay, so some people call it VAT, some people call it as making charges, some people call it as a wastage. So when you go to gold shops, people will confuse you. Don't get confused. It's one and the same. It's one and the same. So these are some excess tax is nothing but so I have, this is a part of your doubts clarification, and excess tax is nothing but it's a tax imposed on the manufactured item. It can be alcohol, it can be anything, any biscuit packet, whatever it is, that's called excess tax. And customs duty. Customs duty means what? On exports and imports. On exports and imports. So you are exporting or importing, you have to pay some tax to the government. For example, Harley Davidson is being imported from USA to India. Then they will pay some 50% of tax on the value of that Harley Davidson to US, to the customs. Now, if they get it for 100 rupees, they will sell it here for 150 rupees because they are paying 50 rupees as a tax. Okay, so like that, on exports and imports, you are imposing any tax, that's called as a customs duty. What is it called as a customs? Surcharge. What is the meaning of surcharge? Surcharge is nothing but it is additional tax imposed. What is it called as a additional tax imposed? Additional tax is nothing but without any reason some additional tax. That's it. Okay, that's called surcharge. It's called as a surcharge. Okay. Next one. Next one. We got something called as a cess. What is the meaning of cess? Cess is nothing but it is a tax imposed for a special purpose. Means what? Government has a purpose for the tax. Okay, either for contributing money to Swachh Bharat, either for contributing money for the relief measures of COVID-19, or either contributing money for the welfare for the welfare of the farmers, or contributing money for the promotion of the education. So with a purpose, when they impose some tax, that is called as what? Cess. That's called as what? Cess. And one more last one that is called as cascading tax. Cascading tax. What is the meaning of cascading tax? Cascading tax is nothing but it is a tax on a tax. What is it called as a tax on a tax? Means what? For example, I am purchasing item of 1000 rupees. Okay, maybe on this 1000 rupees, let us say like for example, my income is 1 crore. My income is how much? 1 crore. On 1 crore, maybe I am paying some 20 lakhs. 20 lakhs as what? Tax. How much I am paying? 20 lakhs as tax. Now, on this, government may charge me 10% of surcharge. 10% of cascading tax or surcharge. Means what? On this again 10%. Means again how much? 2 lakhs. Means total how much I pay? 22 lakhs I pay as a tax to the government. So if I am earning 2 crores, how much is left over with me? Only 78 lakhs is left over with me. Now if you see that 2 lakhs is nothing but income tax. On 2 lakhs, again 10% I paid. That is nothing but a surcharge. This surcharge is a kind of a cascading tax here. Is a kind of what? Cascading tax here. Means in the form of cascading tax, they are taxing me what? Surcharge. That is nothing but tax on a tax. Well said, Akhil Reddy. Beti Bachao, Beti Padhao says. Yes, very nice, Yarsha. Okay, education says very good. That's true. Okay, Swachh Bharat tax. Very good. Swachh Bharat says. Okay, education says very nice, well nice, well nice. You have a good idea. Okay, appreciate. So this is nothing but different types of indirect taxes. Now we are coming to the ultimate indirect tax of the session today. There is nothing but GST. What is that called as a GST? Very important topic. GST. What is the full form of GST? Goods and Services Tax. What is it called as a goods and services tax? Now tell me, this GST has come into existence with a lot of reasons. There are a lot of purposes. What are the different benefits of GST? GST, because of incorporating GST, what are the benefits that the economy is going to derive? Just answer me the question. By the time I have some water. Okay, just answer me the question. Yes. What are your answers? I wanted to ping. Yeah. Explain about fund of fund. Shravanti, you're asking me a current affairs question. I think this was discussed in the current affairs class. Shravanti. Elimination of cascading tax. Very good, Mr. Ramarao. RRR is the right one. First one is nothing but elimination of cascading tax. Shravanti, if you want, I will discuss. Okay, but not now. Okay. Elimination cascading tax. Elano, I'll tell you. How I'll tell you. First one. Next. To combine all different tax into one tax. Yes, single tax. Removal of indirect taxes. Not removal of indirect taxes, simplification of indirect taxes. Simple tax. Unorganized sector is regulated under GST. That's true. Expanding the taxation. Expanding the taxation purview, I can say. Purview of taxation. Boost to the economy. Yeah, very generic word, Mr. Salman. Boost to the economy. Okay. Bonvita economy of the nice, nice. Yeah, it'll boost the economy. That's true. Chini Salman, small Salman. Number of taxes decreased by imposing GST. That's true. Unification of taxes. Uniform tax. Uniform throughout the country. Uniform tax throughout the country. Okay. Very nice. Reduce various tax burden. That's true. That's true. Number of taxes are decreased by imposing GST. That's true. GST is complicated tax method which has classified commodities and assigned different tax percent. GST is complicated. That's your opinion, Mr. Kitty Cat. Okay, fine. Easy flow of FDI. Very good. FDI flow. FDI flow. Okay. Fine, nice. Very good and very good. You're giving a lot of good answers. Okay. Cat, Kitty Cat. Okay, it depends. It depends how you look at that. Your views also can be read to some extent. Okay. Now, the purpose of GST is nothing but if you see in the country, we got different states and the taxes are different in different parts of the country. Now they wanted to see to that there is a uniform taxation throughout the country. The first and foremost important thing. Second important thing, it seems that once Einstein said that I understand everything in this world except Indian taxation system because Indian taxation system is very complicated. Okay, now to that solution also they wanted to bring and make it very simple, and they wanted to make it as a uniform tax or a single tax throughout the country. Okay, next important, one more important thing is that there's something called as a cascading effect. What is it called as a cascading tax? How? Just to see an example here, just see an example. Earlier we have got a different excise duty, customs duty, you got sales tax, you have got VAT. For example, you take 1000 rupees worth items. Let us say there is a 10% of excise, 10% of, let's say, uh, sales tax, 10% of VAT. Means total tax is how much? 30%. What is the total tax? 30%. 10%, 10%, 10%. Now, if you say earlier methodology, how it was means, first on 1000 rupees 10%, how much would be a tax? 100 rupees. So 100 plus 1000, it becomes how much? 1100 rupees. Now on this 1100, again you have to impose again how much? First you imposed 10%. Now on this 1100 impose again 10%. So you will put a tax of 110 rupees. 1210. 1210. Now again, okay, 1210 is there, that's done. Again put again 10%. On this again 121 add up. Means 1331. So what's the total tax you are paying? 1000 rupees the value of the item, 331 rupees is the tax. So you are paying a tax of how much? 331. Now because of GST you pay outright 30% because GST is also a consumption based tax. What is that? Consumption based tax. GST is also consumption based tax. So that is the reason. That is the reason. Outrightly, if you put 30% on 1000, you pay a tax of 300 rupees. In GST, you are paying a tax of 300 rupees. Here, you are paying a tax of 331 rupees. So, there is increase of how much? 31 rupees tax. This is called as a cascading effect. Because this 31 rupees came because initially on 10% 100 rupees, on 100 rupees again 10% 11 rupees tax, again on that 11 rupees again 10%, okay, total tax became again 21, so total 31 rupees is the extra tax that you are paying. Okay, so that is the reason, it is eliminating the cascading effect. Okay, na? Demand easy calculation, explain it at the end of the class. Okay, Strauss. Control of black money circulation, that's true. Investment more into the country by imposing GST, that's true, that's true. Okay, so like that it eliminates the cascading effect also. Okay, there are the benefits of GST. Now let us understand how did GST originate. How did GST originate? See here, the principal reason for GST is that but initially we had something called as a mod VAT, modified value added tax. It is introduced by the Finance Minister of 1987, that's VP Singh, Vishwanath Pratap Singh. Vishwanath Pratap Singh. Okay. Now, this Vishwanath Pratap Singh, whatever the Modvat he has got, later on, this was developed a little bit by P.V. Narasimha Rao and Manmohan Singh. These people have developed this modified value tax. After developing this into a special VAT, later on what happened? Mr. Atal Bihari Vajpayee came. Okay, in 1996, 1997, during that point of time, he appointed different committees. Okay, first he has appointed someone called as the Asim Das Committee, Asim Das Gupta Committee. Asim Das Gupta was the finance minister of West Bengal government. Okay, he was appointed made as the chief of this. Next, we have got one more that's called as the Ravidas Gupta Committee. After that, again, okay, last they appointed one more committee. It's called Vijay Kelkar Committee. Who is that? Vijay Kelkar Committee. Now, these three committees they worked on this VAT, moderate everything, and they developed a model called as a GST model. What they developed a GST model. Okay. Now, when they developed this GST model in 2006, the UPA government has said that by 2010 they are going to bring a GST. But the states were not supporting the UPA government. They did not have good number of support from the states. Now, after UPA government left in 2014, Narendra Modi government came. And Narendra Modi government was very intentional to start this GST. And what he did in 2016, he passed the GST bill. He passed the GST bill. Okay, so I'll give you time to take a screenshots. Don't worry. And in 2016, what did he do? He passed a bill that's called as the 122nd Constitution Amendment Bill. What is that called as a 122nd Constitution Amendment Bill was passed in 2016. In 2016. Remember that GST is a 122nd Constitution Amendment Bill. It's not an ordinary bill. It is a 122nd Constitution Amendment Bill. And one more important thing is that this was passed in Lok Sabha. This was passed in Rajya Sabha. It was sent to the states. It was sent to the states because this is a special constitution amendment bill. More than 50% of the states have approved that. More than 50% of the states have approved, and finally with the president's signature in the month of September 2016, the president's signature, this has become something called as a 101 Constitution Amendment Act. It has become a 101 Constitution Amendment Act in the year 2016, September 2016, right? So that is how a bill became a act. A bill became a act. Now, very important. Out of all the states, Assam is the first state to ratify GST bill. Assam is the first state to ratify GST bill. Like this, the GST Act came into picture, and finally on 1st of July 2017, GST became a reality. So it is celebrated as what? GST Day. What is celebrated as a GST Day? Very important. 1st of July. 1st of July is a GST Day. 1st of July is a Doctor's Day. 1st of July is a CA Day. 1st of July is also one more day. What is the one more day? SBA Foundation Day. Maybe it might have dealt in the banking awareness class. July 1st is also SBI Foundation Day. So that is the significance of 1st of July where GST came into implementation. So this is with respect to the history of GST. Very important. Make a screenshot of these things. Okay, moderator PV Narasimha Rao, Manmohan Singh, Atal Bihari Vajpayee, not ABVP, it's Atal Bihari Vajpayee. Okay, Asim Das Committee, Ravidas Gupta Committee, Vijay Kelkar Committee, these are the committees on GST. What are the committees? Questions are asked on this also. Committees on GST. Okay, and finally, okay, in 2016 they started the process of this GST. Okay, just to make a note of this. And then this one also. This is very important slide. That's true, Chetu. SBA Day. Okay, I hope you took a snapshot of this. Okay, now let's go to something called as a types of GST. Types of GST. Okay, any doubts, do ask me. Okay, be very alert now. When you say types of GST, GST is of different types. One is called as a CGST, one is called as a SGST, one more is called as a IGST, and the other one is called as a UTGST. Okay, whatever is CGST, okay, it goes to the central government. This point is very important. Central government. Whatever SGST is collected, that goes to the state governments. Whatever is collected in the form of IGST, that is meant to compensate the states where production is happening in one state but it is being sold in another state. For example, Kia Motors is being manufactured in Andhapur of Andhra Pradesh. If that is sold in Telangana, manufactured in AP but sold in Telangana. Now what happened? GST is a consumption based tax. Where one is consuming this item, this is being consumed in Telangana. So the tax will come to Telangana only. Tax will come to Telangana and also central government. Now in such case what they're trying to do is that they're trying to impose something called as IGST, and they're trying to give that to that Andhra Pradesh also some amount of the money. So that is nothing but IGST, integrated GST. What is it called as a integrated GST? Integrated GST. Okay, and then UTGST stands for Union Territory GST. Union Territory GST. UTGST stands for what? Union Territory GST. Very important. Now remember that UTGST is not applicable to Delhi, Puducherry, because both of them have got a state assemblies. Now Jammu and Kashmir is Union Territory, but that is not existing. So now it may not be applicable. Later it may be applicable. So for these people, what will be applicable? SGST will be applicable. What will be applicable? SGST will be applicable. So they are the types of GST. They are the types of GST. So whatever CGST is being collected, it goes to central government. Whatever SGST is collected, it goes to state government. Whatever is IGST, it is taken by the central government to compensate the states which are manufacturing. So to see to that the manufacturing states are not getting into any loss. And then UTGS is applicable for what? Union territories. Applicable for what? Union territories. Very important. Very important. Okay. So this is with respect to this one. Take a screenshot of this. Okay. Next one. GST slabs. Any doubt? Do ask me. GST slabs. See here, based on the type of the item, we are imposing different slabs. What are different slabs? It can be 5%, it can be 12%, it can be 18%, it can be 28%. Okay, sometimes can be even 0% also. Very essential commodities will not have any GST, so there is a 0%. Very luxury items, okay, they'll have something called as a 28%. They have something called as a 28%. So essential commodities and luxury commodities, as you move from essential to luxury, the tax percentage also increases. Okay, now if we see that almost 98% of the items are less than 28 18% only some 2% of the items are at a 28% slab. Means majority of the items are less than 18%. Only few items are more than 18%. And government wanted to reduce into one or two slabs, like somewhere around 15% or something. So that process is going on. Okay. And one more important thing is that gold is tax rate. Gold is tax rate 3%. What is the tax on gold? 3%. And when you come to something called as diamonds, Diamonds are taxed at 0.25% because they're very, very essential. Which gold and diamond. As they're very, very essential, they're taxed at very, very low rate. Yes or no? So definitely they are not essential. They are luxury, but they are taxed at a very, very low price because it is something meant to the women of the society. So government don't wanted to get into any trouble. They don't want to disturb the women's mindset. So they keep it at what 3% and 0.25%. Okay. So there is a special tax slab for gold and diamonds. And the next is nothing but exceptions to GST. What is that? Exceptions. There are some things which are not part of GST, but they have got separate tax. What are they? One is nothing but crude oil or petroleum. Then you've got electricity. Then you've got something called as alcoholic liquor, aviation turbine fuel, etc. So all these are nothing but these are exceptions to GST. They are what exceptions to GST. For them, different tax slab. There is a plenty of reasons. Crude oil is dependent on the international market. Aviation turbine fuel is also dependent on the international market. And when you come to electricity, we don't have uniform electricity throughout the country, so electricity is not part of GST right now. Okay, and alcoholic liquor, this is a main source of revenue to the government, and Goa comes under SGST or it comes under SGST. Okay, essential, yes, luxury, yeah, BMW is luxury, that's true. Okay, alcoholic liquor because on alcoholic liquor, if we see government can impose 60, 70, 80, 100% also, and still people will buy alcoholic liquor. So government wanted to have this what is it called golden duck aside because if they put it under GST, the maximum what you pay is only 28%, and 28% is very, very less for that. Cigars are under 28% Sriya Shah. Okay, and again on top of 28%, again there will be something called as a surcharge. Everything cigars will be some more than 30%, but alcohol liquor is not under GST because alcohol liquor has got a very big range. The range is very, very different. It cannot be in a small range of 28%. So these are all nothing but different tax slabs on GST. Different tax slabs on GST. Is that clear? So they are the tax slab. Next we go to the very, very important about the structure of GST. How does the GST look like? Okay, the first and the foremost we have got something called as a governing council. What is that called as a governing council? Remember that all the decisions pertaining to GST are taken by the GST governing council. Okay, GST governing council will take the decisions pertaining to GST. It is not the prime minister, it is not the finance minister who will take the decisions. All the decisions are purely taken by the GST governing council. How does the governing council look like? A GST governing council, GST governing council will have the head as a finance minister, and the members will be state revenue or finance ministers. State revenue or finance ministers will be the members. Now if you see that finance minister represents the union government. State means they represent what state governments. Now whenever they're taking a decisions in the GST, very, very important point, union government will have a voting right of 33.33 percentage. State governments will have voting of 66.66 percentage. State governments will have voting of 66.66 percentage and union government will have 33.33 percentage. Now, if they had to take any decision, the majority required is 75 percentage. What is majority required? 75 percentage. Means what? You can clearly see only union government has only 33.33 percentage. State governments have 66.66 percentage. To take any decision, only union government or only state government's consent will not be sufficient. Will not be sufficient. Both of them together will have to take a choice. For example, you might tell me that the union government will give 33.33%. In the states also, there are some BJP ruled states, they also will vote in favor. But more than 50% will not be there. No? There can be 50%, but it's not. It is very. If you wanted to get a majority, 33.33, you need again 44 percentage, 41, 42 percentage. To getting 42 out of 66 is a very very difficult aspect. Kabatti, all the decisions are taken by the GST Governing Council. Only when the state government say okay, then only the decisions can be taken. Only when the state government say okay, then only the decisions can be taken. Very 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 important. So why it is very very important? Because this concept of GST council is strengthening the federal concept of India, is strengthening the federal concept of India. So that is how it's very very important. It's very very important. Any doubts here? Any doubts, do ask me. Okay, so that is how GST council takes decisions. Very very important. Okay, this happened because there's a live example of real estate. In real estate, what I meant, Sri Narendra Modi wanted to reduce the real estate GST from 12 percentage to 5 percentage. 12 percentage to 5 percentage. And when he was in an election rally, he has announced to the people saying that I am reducing the GST from 12 percentage to 5%. मैंने GST के ऊपर ओके 12% जो है उसको मैंने 15 5% कर रहे बोल के ऐसे वो प्रॉमिस दे दिया. Okay, so he has given the promise and he came and he told to finance minister, Mr. Finance Minister, reduce the GST on real estate to 5%. Then what happened? The Congress ruled the state governments. They said that we don't want. Now obviously finance minister cannot do anything. Then finance minister asked, why you don't want? Because it's good to the people. Then they said that you should ask us first, you should not declare first. Your prime minister has declared it in the meeting and now you are coming in asking us to do these things. I'll not do. Okay, because that is my power. Whatever is within my power, how can someone else announce? So immediately they said sorry to them, and finally they have agreed to reduce the GST on real estate from 12% to 5%. So that is how GST on real estate has got reduced. Okay, so this is a very very significance of governing council, GST governing council. Okay, na? The next one, we have got something called as a GST network. What is it called as a GST network? Now you see that whenever you start any business, you need to get a GST number. Who will give you the GST number? Whenever you get some revenue, you need to pay some GST to a authority. Whom do you pay GST to? That authority. All these proceedings of GST means what? The functioning of the GST executive actions are taken over by the GST network. GST network. Yes, Ajay Gogneri. Sir, central government is going to take some actions in electricity. Can you explain them? Even Telangana state also opposing that. You are speaking about the 90,000 crore discoms package announced by the central government. That's what you mean to say? Or the privatization of the distribution companies, which central government is already starting in union territories. That you do mean? What is that you meant? Because there are two things that have come in news. Okay, privatization of the electricity distribution companies. That is what. Okay, I think that's the one you are speaking about. Let me know what is that you meant. Okay, so GST network. When you say GST network, all these proceedings of GST are managed by GST network. Means what? GST council will take a decision. Who will implement that? GST network will implement that. And the chief of GST network is Ajay Bhushan Pandey. Ajay Bhushan Pandey. He is the chief of GST network. Who is that? Ajay Bhushan Pandey. Okay, fine. Second one. Nice. I'll tell you, Ajay. I'll take up your question and Shrav's question at the end. Okay. So Ajay Bhushan Pandey, very very important person, is the Revenue Secretary to Government of India. So he is not only the Revenue Secretary, he is also UIDAI Chairman and he is also GST Network Chairman. So very very important person is this Ajay Bhushan Pandey. So very very important, GST Network. GST Network. Okay. And the next one, we have got something called as a GST AT. What is the full form of AT? AT stands for Appellate Tribunal. Appellate Tribunal. What is this Appellate Tribunal? Appellate means highest. Tribunal means three judge bench. Means with respect to GST, if the state governments have got any problem with the central government, instead of going to the Supreme Court, they can directly go to the GSTAT and file a case against the central government saying that we are put to some loss because of some initiatives of the central government with respect to GST. So any concerns faced by the state governments can be addressed by the GST appellate tribunal with respect to the central government. Okay, so central government nundi, if state governments are facing any issue with the central government, they can approach the GST appellate tribunal, whose headquarters is present in head branch is present in New Delhi. Okay, so these are the different concepts with respect to GST appellate tribunal. GST appellate tribunal. Is it clear, Andy? So one last thing I wanted to take up with respect to GST, there is nothing but input tax credit. After completing this, I will answer your questions. What is this input tax credit? See here, input tax credit is nothing but whenever you manufacture an item, now while manufacturing, to manufacture that you take some raw materials. You buy some raw materials and using the raw materials you manufacture the item, right? Now when you are purchasing these raw materials, you pay tax to the seller. After paying the tax, you get the raw materials, you create that item. Now when you are selling this item in the market, again you take again GST. Means once GST is paid here on the raw materials, this item going to the market, again GST is paid here. Now when you're paying GST twice, out of this one and this one, let's say this is GST 1 and this is GST 2. For example, if 2 is greater than 1, then what will happen? This 1 will be given back to the person. If let's say 1 is greater than 2, 1 cannot be greater than 2 అని కాదు, ఇక్కడ 1 అంటే identity, here 2 అంటే identity. Then what happens? This 2 will be again given to the person who paid that. So this example I can explain you with the help of real estate. In a real estate, when you purchase a property, in real estate, what happens? To construct this, you need brick, you need cement, you need iron, you need steel. On all these things, you pay GST. On all these things, you pay GST. And finally, when you sell this to customer, again GST to be paid by the customer on the real estate. How much? Earlier it was 12%, now it's 5%. But in earlier case, what they used to do, they used to calculate GST of 12%. Okay, and whatever the GST paid here, they used to give back to the builder. Now what they did, they removed this one. This was called input tax credit. Now they removed the input tax credit for real estate. They made the GST as how much? 5%. So input tax credit is not applicable to the real estate by reducing the GST on real estate from 12% to 5%. Clear? So this is the concept of input tax credit. If you got any doubt, do ask me. If you want me to re-explain also, I'll explain one more example if you want. Okay, things are clear, then take a screenshot of this. You can understand the diagram. Raw materials, there's the raw materials, finished product. Okay, this is a market. Okay, so this is a last concept of GST. GST. I hope I am clear, right? Okay, please take the screenshot. Once again, very nice, Dolly. Once again, I'll tell you. See here. I'm writing example and for real estate labor cost 20 lakhs profit. See here, in this one, 20 lakhs raw materials, 3.6 lakhs GST on the raw materials, 18%, 6.4 lakh labor cost, 20 lakhs profit. Total is going to come how much? 20 plus 20, 40, 46.4 plus 3.6, 50 lakhs. Price of the property. Price of the property. Now this is sold in the market. 50 lakhs is the property price into 12% is the GST. Is equal to how much? 6 lakhs. So total value how much is the customer paying? 56 lakhs. 56 lakhs. Okay, as there was an interruption with the network, please explain the. Yes, I'm doing that. Okay. I'll do a recap, Vishwanath, don't worry. Yes, I'll do that. I'll do a recap, Chandu. Okay. Now, just I'm trying to explain the concept of something called as a, what is the concept called as a uh, input tax credit. See here, a builder purchased 20 lakhs worth of raw materials. On 20 lakhs, he paid a GST of 3.6 lakhs because he is a consumer to the raw materials. And 6.4 lakh he pays as a labor cost for constructing the property. And 20 lakhs is the profit that he is expecting. So 20 plus 3.6, 23.6 plus 6.4, 30, 30 plus 20, 50. Total is selling the property for what? 50 lakhs. Now he put the property for sale for 50 lakhs. Someone purchased the property, they paid 12% as a GST. They paid how much? 12% as a GST. When they paid 12% of the GST, they'll pay how much GST? 6 lakhs. So total how much they're paying? 56 lakhs. Now if you see that how much is the GST paid by the customer, what you see is normally 6 lakhs. But he's paying more than 6 lakhs. Why? When he's paying 56 lakhs, 6 lakh is the final GST plus in that 50 lakhs, 3.6 lakhs is also there. So he's also paying 3.6 lakhs. Total is paying 9.6 lakhs. How much is he paying? 9.6 lakhs. Now when he is paying 6 lakhs of GST on 50 lakhs, 50 lakhs is a property. The property involves bricks. The property involves cement. The property involves steel. The property involves iron. The property involves tiles. Everything it involves. Means what? 6 lakhs is paid on the property, means 6 lakh is paid on the cement, 6 lakh is paid on the tiles, 6 lakh is paid on the iron, steel, everything. But he is paying 56 lakhs. 6 lakhs is a final GST. In that 50 lakhs, again 3.6 lakhs again on cement, steel, everything GST. Means what? On the same cement is paying twice GST. On the same brick is paying twice GST. On the same everything is paying twice GST. That is not the right one. So what government said, if you are paying 9.6 lakh, what is the smaller amount? 3.6 lakh is a smaller amount. That I will give back to the person who paid me. But who has paid that 3.6 lakhs? The one who constructed this property. Who constructed the property? Builder constructed the property. So builder is getting this 3.6 lakhs back. Who is getting a builder is getting 3.6 lakhs back. But who paid the 3.6 lakh? Customer paid. Means what? Customer is paying, but the money is given back to the builder. So now customer is at a disadvantage. Customer is at a disadvantage. As customer is at a disadvantage, as a customer is at a disadvantage, government thought that I will remove that. How will the government remove? Government said that I'll reduce this 12 percentage to 5 percentage and I'll not give anything back. Means what happens? 5% of 50 lakhs. How much? 2.5 lakh. Plus how much he paid here? 3.6 lakhs. 6.1 lakh is the GST paid by the customer. Now customer will pay only 52.5 lakh. In 52.5 lakhs, the GST is 6.5 lakh. That's it. So now customer burden reduced. So that money which was given back to government is called input tax credit. Now for real estate, input tax credit is removed and the GST is reduced from 12 percentage to 5 percentage. Is it clear? So this is the concept of input tax credit. Input tax credit. Clear? Okay, I'll just revise the things what we discussed, so that someone said that there was some network issue in between them. So if you have missed out, you can recap that. So today's discussion, we started with the inflation things, right? We said that there are indicators of inflation. What indicators of inflation? GDP deflator, producer price index, wholesale price index, then consumer price index. These are nothing but indicators of inflation. Next, we went on something called as methods of controlling inflation. How do you control inflation? Monetary policy measures, fiscal policy measures, administrative measures, and supply side measures. These are the methods of controlling the inflation. Then we went on discussing something called as the concepts of inflation. There is nothing but deflation, disinflation, stagflation, core inflation, and reflation, and reflation. Okay, so deflation means decrease in the price. Disinflation means decrease in the rate of inflation. Stagflation means inflation without growth of the economy. Core inflation means inflation without consuming food and energy products. Okay, and reflation is nothing but artificial inflation. Then next we discuss something called as a business cycle. In business cycle, so this is how you understand the concept of reflation. Government is increasing the prices artificially so that it is boosting the economy. Just now what we are doing right now, 20 lakhs crore package. Then we went for the Indian taxation system. We discussed about the benefits of Indian taxation system. What are different types of tax? Who is managing the tax and who are the chiefs of that boards? Then on we went on discussing something called as direct taxes. We discussed about income tax. What are the different slabs of income tax? Okay. Then we discussed something called as a corporate tax. Micro, small, medium, large enterprise. The entire corporate tax is nothing but 22%. Minimum alternate tax is 15%. Dividend distribution tax is currently 10%. Earlier, dividend distribution tax was paid by the companies. Now it is to be paid by the shareholders if the value is greater than 5,000. Okay. And minimum alternate tax is nothing but 15%. Any company which is not paying tax will have to pay minimum alternate tax. Then we went on discussing something called as a capital gains tax. We got two types: capital gains tax on equity. When you come to normal capital gains tax, on the properties that you pay, long term is greater than 2 years, short term is less than 2 years. Here the long term is greater than 1 year, short term is less than 1 year, right? On profit of selling land, we have to pay both CGT and capital gains tax and income tax. Chudamma, you have to pay income tax if the property is sold before 2 years. Otherwise, you have to pay capital gains tax. Okay. Next one, value added tax. Value added tax is nothing but when you modify the item by giving some value to that, then you get something called as a value added tax. Next one, excise tax. What is it called as a excise tax? What is this excise tax? On manufactured item, whatever the tax you impose, that's called excise tax. Customs, on exports and imports, whatever tax you pay is called as a custom tax. On surcharge, additional tax that you pay is called surcharge. Surcharge with a special purpose is called as a cess. Okay, and cascading tax is nothing but a tax on a tax. Sometimes surcharge will be type of a cascading tax, and this is one example that we took with respect to property tax. Okay, the next one. Okay, this is a surcharge example. Next one, GST. So we discuss what is the different purpose of GST: eliminating the cascading effect, single tax, simple tax, okay, expanding taxation purview, and uniform tax, removing the loss of revenue, and FDI flow. Okay, and then we discuss here the topic of something called as a cascading tax. Then we went on something called as a history of GST, mod VAT. How did this mod VAT convert into special VAT, and then it is done through in the form of GST because of Atal Bihari Vajpayee, because of different committees set up for a GST. Okay, and then we went on discussing about act. GST is a 122nd Constitution Amendment Act, and it is a 122nd Constitution Amendment Bill and 101 Constitution Amendment Act, and Assam is the first state to ratify a GST bill. Okay, and remember that GST came into implementation from 1st of July 2007, which is celebrated as what, GST Day, and many other important days like SBI Foundation. Everything is on a same date. Okay. Then when we went and discuss about types of GST: CGST, SGST, IGST, UTGST, central government, state government, integrated, applicable for interstate goods, very very important, and UTGST is applicable for union territories, right? Then next we discuss about GST tax slab: 0%, 5%, 12%, 18%, and 28%. Essential commodity means very less, otherwise it's very very high. For luxury it will be 28%. Gold is taxed at 3%, diamonds are taxed at 0.25%. There are something which are not part of GST, they have got separate taxation. They are nothing but this is crude oil, electricity, alcohol, liquor, aviation, turbine fuel, all this things. Okay, and then next we went on discussing something called as a GST council. All the decisions pertaining to GST are taken by the GST council. It is headed by the finance minister. Okay, the union finance minister, and all the state finance ministers are the members. And if union government has got 33.3% voting share, and state governments has got 66.66% voting share, and to carry any decisions, majority of 75% is required. And then we went on something called GST network. Someone has got a problem on network, just here. GST network will do the proceedings of GST. Means correction of GST, payment of the refunds, giving a GST IDs, everything is done by the GST network. Earlier it was a private enterprise, now it is owned by Government of India. Ajay Bhushan Pandey is the chairman of GST network. Ajay Bhushan Pandey is also Revenue Secretary to Government of India. Ajay Bhushan Pandey is also UIDAI Secretary, Chairman, and he is also GST network Chairman. Okay, and then finally GST appellate tribunal. GST appellate tribunal is nothing but it is a tribunal that actually resolves the disputes faced by the states with respect to central by in case of GST. Okay, and finally we discuss the topic of input tax credit. Okay, so if you're paying twice tax on the same item, the lower of the two is given back, that is called input tax credit. Same thing was applicable to real estate, but in case of real estate the builders are not giving the benefit to the customers, so they remove the concept of input tax credit and they reduce the GST on real estate from 12% to 5%. Clear? I think that's all for today. And somehow yeah, what is this, yeah, I also again explain this topic, that's fine. So I have got two questions, sir. Thanks, Shirisha. On profit sharing line, we have to pay both the CGST. Yeah, that's question answered. Fine, Amma. See here. చూడండి ఇక్కడ fund of funds. Okay, there was something called as a fund of funds created with from 50,000 crores in the package, 20 lakhs crore package, right? They said that out of this 10,000 crores will be used for fund of funds. 10,000 crores will be used for fund of funds. Means what? First they create one. Under that there will be some daughter funds. Okay, so what they will do is that yeah, thanks Akhil. So when you see that this 50,000 crores load, 10,000 crores is kept as a mother fund, and there will be some under that there will be some funds. Okay, now using these funds they'll try to give loans to different sectors. They'll try to give some loans to different sectors. Now these funds are again managed by these funds. Okay, so this top mother fund is called as the fund of funds. It's called as what? Fund of funds. One more thing. And one more question was asked by Mr. Yeah, NABARD also can be there. What NABARD does is refinancing, Mr. Kitty Cat. That concept is different, refinancing. Okay. And one more, Ajay asked me some question. Pike. That pike. Okay. Little bit. Good. Yeah. Fine. Ajay, you asked me about privatization of discoms. See, Ajay, in distribution companies, what are distribution companies? They actually purchase electricity from the generators and they distribute to the households. These are called distribution companies. Now, these distribution companies are actually into losses. They are into losses. Now, the burden of the loss is borne by the state governments and also by the central governments. And the government started a scheme called Uday for that. Ujjwal Discoms Assurance Yojana. The purpose of Uday is nothing but to reduce the losses of these distribution companies. But this scheme did not yield that expected results. As this scheme did not yield expected results, now government wanted to privatize these distribution companies, and right now they're applying this concept to union territories. Later on, if it's successful in union territories, they might move it to state governments. That is what the opposition from the state governments, privatization of distribution companies, because the state governments will have to deal with employees working in the distribution companies also. Okay, there will be a lot of problems for them. So that is one thing opposed by this one. So this is nothing but distribution companies, right? Yeah. So if you got any doubts, thanks Chandu. Yeah, thanks Akhil. Example for fund of funds. The recent one, no, that 50,000 thing. What is the example of the fund of funds? Okay. Yeah. So any doubts, do let us know. Okay, we'll get back to you on that. Okay, and do write an examination in the evening. Definitely, there will be some questions you cannot answer. Also, I can show. I should tell you that I have given some questions because you need to write that questions, get a question out of that, and come and ask me some questions in the next class. Okay, so do write, and that is going to help you a lot. That's going to help you. Okay, thanks a lot. Thanks a lot, Ramaragar.